All right, and welcome back to the channel. Today we are diving into one of the most boring and most challenging sections, but one of the most important, and that is state laws and regulations. Now, this is the generic national version. It is not state specific, and you do need to know your state specific numbers, timelines, things like that. We are working on getting videos created for all 50 states and Washington, D.C. But in the meantime, until we roll those out, this is a great video that will work for everybody. We're going to walk you through the parts that every state tests, what's universal across the industry, and the favorite question types and examples that the exam loves to throw at you. So while every state does have its own version of, say commissioner or director, things like that, which we're going to jump into, and their own timelines and their own penalties. In this video, I'm going to give you the foundation, the concepts, the structure, so you know exactly what to look up in your state outline. So that when you're sitting there reading this very kind of boring, law-heavy chapter, you know what you need to highlight or circle or pay attention to. We're going to cover licensing, appointments, unfair trade practices, etc. And by the end of the video, you are going to know what and the why. And then your state outline will just give you those numbers. Okay. If we do not have your state specific video up, please go ahead and drop your state and your exam in the comments, and we will get working on that. Also check out our workbooks and things like that. So, like I said, we're going to go over the main focuses, right? The numbers are going to vary. I'm going to kind of give you some ranges, but you're going to want to look these up. Depending on what state you're in, you may be required to take a pre-licensing course. And if you are, we have some of those available on our website. If you don't need to take a state-specific course, you can find these numbers once we load our state specifics, or looking them up online, etc. But I always suggest that regulations is like the last chapter that you study. There are a couple states that throw the regulations in throughout. Like Arizona, they're kind of mixed into every section, but the majority of them, they teach the section at the end. So you're going to want to understand your core property and casualty concepts before checking out this video. If you haven't, definitely jump into that material. I'm not going to dive deep into different policy types or things like that. We're going to teach this as if you kind of have a basic understanding, like you've already done the other parts of the course, right? But state laws and regulations always kind of trip people up. And, when you're at the end of your studies and all this confusing things and you're seeing all these laws and rules and statutes, it just can be a lot. So I'm going to help you break it down, understand it, and know what are the common questions that they're going to ask on the exam about this part. So, all right. So you need to know your licensing requirements. Okay. So how long is the license valid for? Do you have any PLE, pre-licensing education requirements? Okay, so some states actually you have to sit through a state approved course, right? Other ones you do not. However, you need to study the material. I would highly suggest you study the material before sitting for the exam, because these aren't necessarily like common sense scenarios, right? So we will jump into, let me see. Yep. We'll jump into these items a little bit further, but you want to know how long is a license good for? It's generally 2 years, typically 2 years. And then you would renew it. And then you usually have CE requirements, continuing education. You need to know the number of hours, okay? So, it's usually typically between 24 to 30 hours. Again, generally it's every 2 years. There are some states that are 3 years, some that are annual. And you also want to know how old you need to be. It's generally 18 years of age. Um, and then find out if your state has fingerprinting requirements. Almost all of them do. Okay. We're also going to go over unfair trade practices and claims, producer duties and authority, and then some specific laws and regulations to property and casualty. So this study guide covers universal state regulatory principles that appear on P&C exams nationwide, key federal requirements, and common state law patterns. Master these concepts to pass your exam. Now, some of these questions are going to be like you would never see a question that has this range on it on your exam, right? But I'm wanting you to get comfortable with how the questions may be presented. So we're going to be answering these based off of this universal part. But you'll want to know what your state numbers are. Again, check out, see if we have a video dropped for your state yet. If not, we're working on it, I promise. So in your situation, it would actually have the exact number as one of these answers. But a sample question. Most states require P&C producers to complete how many hours of continuing education per renewal cycle? And for this, we did say 24 to 30 hours. So that would be B, but yours would be your state-specific one. So if you already know what your continuing education requirement is, rewrite this question with some different answers in there, and circle the correct one. All right. So each state has a Department of Insurance, right? And then there is a chief insurance regulator that's kind of the head of this Department of Insurance. Depending on what state you're in, is going to determine what that person is called. Okay. So you'll often see commissioner, director, superintendent. There are some other ones, like if you are in Florida, it is the chief financial officer. So know what your term is, right? I may say commissioner, I may say director, right? But you need to know what that term is so that when you are looking for these laws and regulations and things pertaining to this person, you know what you're looking for. So even if I say commissioner, but it's called a superintendent in your state, the core responsibilities stay the same. What they do stays the same. All of that stays the same. The only thing that you need to know, when I put SS next to it, that means state specific. You need to know, what are they called? Okay. And then how they are appointed. So what are they called? And how are they appointed? They're either going to be elected by the public or appointed by the governor. So it's going to depend on which state, but make sure you know what they're called and how they are appointed. Okay, it's going to be probably one of the very first things in your state regulation section. Okay, so what is the most important here, once you know what they're called and how they were appointed? There you go. There's 2 possible test questions there. Is their universal responsibilities. Okay. I want you to make a flashcard on these universal responsibilities. Now, you should make lots of flashcards, but this is important so that you know what these are, so that when they throw in one that doesn't fit in there, like all of these are duties of the commissioner, duties of the director, duties of the superintendent, except, and they throw in something else, you know immediately which ones are correct because you're very comfortable with the core responsibilities of the commissioner, the director, the superintendent, which are enforcement of insurance laws. Okay, so we're going to go over what some prohibited practices are, things that you cannot do. And if somebody were to be if somebody were to go in and write a complaint, submit a complaint to the State Department of Insurance, or if there's just some kind of weird things going on with the policies and records and the director or commissioner wants to look into this, they can conduct hearings and investigations, and they can also enforce the laws. So there are fines and penalties depending on what violation might have occurred. And they're going to be the ones that enforce those laws. So, enforce insurance laws. That's 1. 2, conduct hearings and investigations. 3, examine insurers. And what they mean by that is their records. So there's certain records that you need to keep on file for a certain amount of years. We'll get into those. But if, they must examine every insurance company at least one time every 5 years, but they can examine insurance companies' records anytime that they please, and you need to have them readily available, right? Um, and then they also approve rates and forms. Sorry, I know that's hard to read on there, but that says approve rates and forms. Um, and then their biggest goal, so these are the 4 main ones. So enforce insurance laws, conduct hearings and investigations, examine insurers, their records, and approve rates and forms. But their biggest thing, and I don't know why this isn't bolded, is protecting consumer interest. They may ask a question that is simply, I'm going to make a little bit more room here. What is the main purpose of the Department of Insurance, or what is the main purpose of the head of the Department of Insurance, right? So the director, the commissioner, the superintendent, and it is protect the public, protect consumers. Okay, so this is the main one. And they like to ask that test question, right? So insurance is confusing, right? And a lot of people, just generally, don't know a ton about insurance or their insurance policies and things like that. So that's why there are Department of Insurances. That's why you have to take a licensing exam. These are policies that can, really affect people's lives. If somebody's home burns down and they weren't properly protected, or they thought a life insurance policy was in place and it wasn't. I mean, those are some pretty big things, right? So these are important role, and it's highly regulated. And it is regulated to protect the public, protect consumers. So above these 4 things, these 4 universal responsibilities, core responsibilities, duties of the commissioner, director, of superintendent, I want you to put a big star and write that they protect the public. If you want to add that as in a 5th thing, that's fine, but you just need to know how important that is. Okay, I am going to clear the slide while we continue on to the next bullet points, but so if you need to pause before I do that, go ahead, but I'm going to clear those now. Okay, so approving forms and rates. They have the authority to approve or disapprove policy forms and insurance rates before they go into use. So this is the trick question they love to ask. They say, the commissioner does all of the following except, and actually, I think here we go. It's actually our example question. The state insurance commissioner has authority to do all of the following except issue producer licenses, approve policy forms, set federal tax rates, or conduct insurance examinations, right? They do not set tax rates. They do not set policy rates. They do not set rates. Okay. They do issue producer licenses, so that should have been kind of included, but that goes along with enforcing insurance laws. So when you pass your exam and you go fill out your application to get licensed, it is actually the director or superintendent or whatever they're called in your state that approves your license, right? So, but they do not set the rates. They approve or decline them. If an insurance company wants to raise their rates, they can't just do so, right? They can't just do so as they please. They need to submit it to the Department of Insurance and get that rate increase approved. And the person that would do so is the director, commissioner, superintendent, whatever they're called in your state. But they do not set rates. They do issue producer licenses. So authority to grant, renew, suspend, or revoke producer licenses based on qualifications and conduct. And then they investigate complaints. So actually, let's redo this. So we're going to, whatever they're called in your state, let's say it is the director. And I'm going to put right next to it a star, and they are there to protect the public. And they enforce insurance laws, conduct hearings and investigations, approve rates and forms, issue licenses, and investigate complaints. But that would go under investigations, but we'll just put it here. Investigate complaints. I'm just going to shorthand that. All right. So if it's anything other than those, that's probably the accept answer. But the one they love to do is about setting the rates. Also setting federal tax rates. They don't have even the authority for federal. All right, moving on. Now, licensing requirements. I would say that this is one of the most important slides, right? You want to know these numbers for your exam. I mean, you want to know all of the things that we're going over, right? Because we're picking the most important ones, the most common ones that you're going to see on the exams. But from here is where you're generally going to see multiple questions, right? So depending on what state you're in, some states, the state law and regulation section is only, 8% of the exam. Other states, it's like 30% of the exam, right? But regardless if it's a low percentage or high percentage, you're going to see at least one, if not several questions from this slide. So you need to know these numbers. Okay, but majority of these are going to be state specific. Okay. So who must be licensed? Anyone who sells, solicits, or negotiates insurance contracts must be licensed. Now, the terms sell, solicit, or negotiate is actually, there's a term for it, and that is transact or transacting insurance equals sells, solicits, or negotiates. So you can't even add a car to a policy if you're not licensed. You cannot change the deductible on somebody's policy if they are not licensed. Generally, when you walk into an insurance office, almost everybody there is going to be licensed. If the person at the front desk, we're just going to use that scenario, Brittany at the front desk is not licensed, there's not much she can do. She can, take a payment for the policy and put it in the drawer if that's part of her duties. Or print you out your insurance cards, but that's about it. She can't talk to you about your policy. She can't make any changes on your policy, can't make any recommendations. That would be considered transacting insurance. And the definition of transacting insurance is anybody that is selling, soliciting, or negotiating insurance. So they would like to ask questions and use an example like that. If so-and-so at the front desk, Brittany at the front desk, brings in her mom to write a policy. Can you share your commissions with her? Or can she practice and write the policy on her parents? No. Unless the question clearly states that she is licensed, assume that she is not. They cannot do it. They may say, in order to sell, solicit, and negotiate insurance, what must somebody have? And they're going to throw in some different terms to throw you up, certificate of insurance or proof of insurance. The answer is insurance license, right? You have to have a license to do these things. Okay, so these are the state specifics, multiple questions that you could possibly see, right? So how many hours of pre-licensing education, if you even have pre-licensing education at all. There's only about 18 states left that actually require you to take a course through a state-approved provider, which we have those available on our website, and you can get 10% off. But if you are in one of the other states that does not require PLE, you do not need to get a certificate. You can study and go as you please wherever you want. But if you're in certain states that do require it, You actually have to get a state approved course and go through all the chapters, pass all the quizzes, usually take a final exam. Some states you need to also take a certificate exam. Some states you have to actually, it'll track your hours while you are in the course. So whether you're doing it online or you're going to a course in person, like it'll actually track and you have to complete, 40 hours, or some of them are even, higher than that. So know what your pre-licensing education requirements are. And if you have them, then, one, you need to make sure because you need your certificate to go sit for the exam, but know what those rules are, okay? Because they're going to vary. And then you need to know the age and continuing education. And are there any ethics hours included? A lot of states will say, 24 hours continuing education with 4 of those hours must be in ethics, things like that. You'll see it right there in your state specifics, and or check out our videos if we have your state up. Okay. And then most states are going to have a background check or fingerprinting. Um, I think pretty much all of them do. And then meet residency requirements, right? So you need to be a resident in the state where you're getting your license, generally like your first license or your home state license, right? So if you live in Texas and you want to sell insurance in Texas, you need to go pass the Texas insurance exam. You need to live there, right? You need to be a resident. Now, there are non-resident licenses. Okay, so there are resident and non-resident. You cannot have a resident license in multiple states. It can only be in your home state. Okay. And a lot of states have reciprocity. So if you've passed the exam and you're licensed in Texas, there's a majority of the states are going to say, okay, you're good. You have to fill out an application and request for a non-resident license in this other state. And generally, as long as you've passed the exam and met the requirements in your home state, you generally are going to qualify to get one in other states. But if you are only licensed in Texas and your aunt wants you to write her a policy in New York, you cannot do it unless you also have a non-resident license in New York. And it's very common for insurance agents to have licenses in multiple states. Some states may have some additional requirements. California is a little bit stricter depending on, where your home state license was. It's all going to vary, right? But just knowing the difference. And, if it says if you live in Michigan and you are licensed in Michigan and you want to write a policy in Florida, can you do it? Unless the question clearly states that you are also licensed in Florida, then no, you cannot do it. Okay. You need to know your renewal cycle. How long is your license good for? It's generally 2 years. There are some that are 1 year or 3 years. So know what that is. And that's usually within the time frame of when you have to complete your continuing education. Okay. So, sorry about that. Okay. So generally, as long as you pass this exam, the first time, or if it takes multiple times, once you pass this exam is how I should have worded that, you never ever ever have to sit for the test again, as long as you keep up with your renewals. Okay, as long as you complete your CEs, and actually file for your renewal. There's usually like some fees and things like that. um, you don't want to let your policy lapse or your insurance license lapse, right? You don't want to sit and take these tests again, right? I teach these all the time and I don't love going and taking them, right? So just keep up with your continuing education. It is generally 24 to 30 hours. It's going to depend per renewal cycle. That just means how long is your license valid. It varies by state, but this range covers most jurisdictions. So this is state specific. You need to know those numbers. All right, so I am going to clear the writings on here, and we're going to look at this sample question, which is not formatted properly. Apologize for that, but we can figure it out. Which activity requires a producer license? A, clerical work processing applications. B, negotiating terms of an insurance contract. C, providing general information about coverage. D, referring prospects to licensed agents. All right, so let's break this down. So clerical work processing applications, that can be a little tricky, but because I know that another one stands out as the best answer, they're just processing maybe, data entry and it's clerical work. So that's okay. They don't need a license. Negotiating terms of an insurance contract. Negotiating. That is one of the three terms that makes up the term transact, right? Transacting insurance. What makes you need to be licensed if you are selling, soliciting, or negotiating, right? So if you see any of these words in there, that's generally what it's going to be. So I know that the answer is B. They are negotiating terms of the insurance contract. You cannot do that without a license. But let's continue on. Providing general information about coverage. That's okay. It's general information. They're not saying that it's policy specific. They're not saying that it's advisory. But offering advice or specific recommendations would require a license, okay? But they're saying general information. And D, referring prospects to licensed agents. You do not need to be licensed to send referrals. I send referrals to my agent, right? Well, I am licensed. That was a terrible example. Other people send referrals to us that are not licensed, right? That's how a lot of insurance companies grow, is by referrals. So the correct answer would be B here. Negotiating terms of an insurance contract, you would need a license. Okay, appointment and termination of producers. So agents must be appointed by insurers to represent them. No appointment equals no authority to bind coverage. So an agent cannot write policies for XYZ insurance until XYZ formally appoints them. So even when you pass your exam, you cannot walk out and start selling policies that day. One, you need to wait for your license to get approved by the director, commissioner, superintendent, etc. But two, you need to be appointed with a company. You may already be working with a company, and they're helping you get through your licensing. But once you pass, they will actually appoint you to them, and that is filed with the state, because the agent represents the insurer. You represent the insurance company that you work for, okay? So while it is always in your best interest and, part of your good faith and kind of what you're promising to do once you're licensed to take care of your customers, take care of your clients, your loyalty lies to the insurance company that you work for. You represent the insurer. They're also responsible for you, right? So if you make some mistakes or do some things like that, the agency that you work for, the company that you work for, the insurer that you work for, has appointed you to work for them. So you're usually going to go through some more background checks, some additional training, things like that. Okay. But no appointment equals no authority. All right. So example, an agent cannot write policies for XYZ until XYZ formally appoints them. So they could say, so-and-so just got hired by XYZ company. Can they start writing policies on them? And if there's something in the answers, like not until they're appointed. Okay. Okay, insurer notifications. Insurer must notify the state when appointing or terminating producers. Okay, so when must an insurer notify the state? This is going to be state specific. It is generally within 30 days, but you're going to want to look up your state specific. Let's pretend, right here, varies by state. That would not be one of your options, right? They want to know that you know the exact number for your state. So, the agent also, though, has to inform the Department of Insurance. It's generally within 30 days, but you're going to want to check, because that is state specific, of any address changes or disciplinary actions. If you get arrested, if you have a complaint against you, things like that, and address change. It's generally within 30 days. They do love this test question, which you want to have that on file anyway. And you can get fines and penalties, right? So if you move and forget to tell the Department of Insurance and it's beyond that 30 days or whatever the day amount is for your state, you can actually be fined for every single day that you have not updated that, right? But also, I am licensed in multiple states, and I forget my continuing education hours. I forget when they're due. I forget when my license renews. It's going to vary, right? Some places it's the month of my birthday. Some of it is my birthday. Some of it's the end of the year. Some of it is the anniversary date of when I got licensed. It really depends on your state. You'll know that when you're looking up your renewal cycles. Um, so I never remember when it's time to do my continuing education requirements until I get that notification in the mail and an email. So I always want to make sure that I have those on file. You generally don't want to use like a work email address because, if you leave jobs or something happens, you want them to have a personal email address to get a hold of you. Also, you have to let them know of any changes. But then this way I get my notification and I'm like, oh, shoot, I've got, 2 months to get my continuing education hours. Don't be like me, get them done well ahead of time. We also offer CE courses, so check those out. But um, so an agent needs to inform the Department of Insurance of any address changes or disciplinary actions. They love that test question. Usually it's 30 days, find out your state specific number. And then the insurance company also needs to notify the state within, again, it's generally 30 days, going to vary, of when they appoint or terminate any producers. So they need to know where you're working. Um, there are, it depends on what agency you go work for. You could be a captive agent where you can only work for that insurance company. That's going to be company specific, or you could be appointed to multiple companies. It just kind of depends where you go. Some states also may have limitations there. They may require that you're only with one company, et cetera. So just make sure you check that out in your state specifics. All right. Termination procedures. Insurer must notify producer when terminated. Producer may have the right to respond to allegations. Common time frames, 15, 30, or 60 days, depending on the state requirements. Basically, it's saying you need to let somebody know when you fire them, but I think they would be aware, right? Producers have rights, though. They may respond to the termination and provide an explanation to the state if terminated for cause. Each state sets specific notification timeframes. Confirm your state exact requirements. So in case they say you were fired and accusing you of something, big like fraud or theft or things like that, that could affect your license. So you would have the right to, have a hearing for that and things like that. And that would all go before your commissioner, director, superintendent, etc. All right. Unfair claims settlement practices. Know the days. Okay. This is going to be state specific. You want to know what the timeframes are for your state. They love to ask. You're going to see at least one question on this, if not more. So, um, unfair claim settlement practices are basically prohibited, right? So it's not that it's just unfair. It's you can't do this, right? So prohibited claims settlement practices. Failure to acknowledge claims promptly. So you must acknowledge receipt of a claim within a reasonable time frame. It's typically 15 to 30 days. Check, your state specific number. Um, and if it doesn't have a number and it just has the word promptly, then that is your time frame. So some states use the, promptly as the time frame. Just they need to get it done. So if somebody calls and says, "Hey, I have to submit a claim," the insurance company needs to acknowledge that they have received your claim within a certain number of days or promptly. So find out what your state specific number is, know that. Another prohibited or unfair claim settlement practice would be failure to investigate. So failure to check out this claim and just let it go, let time go by, or deny it without actually doing any investigation um, would be an unfair claims practice. You cannot do it, and you cannot unreasonably delay the claims process either. So you must promptly investigate, know the number of days, or if your state uses just promptly. So there needs to be a number of days to respond. You want to know that number of days to investigate and number of days to provide explanation. And that is either, even if we're approving or declining, we need to provide that explanation. So must provide written explanation when denying claims or offering less than the claim amount. So it needs to be very detailed, even when you're sending, hey, we're sending you exactly the amount that you had hoped for, or even more. There's going to be kind of like a breakdown of how they came to that. They can't just be like, that feels like $10,000 just because I felt like it, right? There has to be a reason why they came to this. Must be a written explanation. And they cannot attempt to settle for less than owed based on policy terms and coverage. Okay. They can't screw them out of their money, right? So there are actual laws and regulations in place to protect consumers, right? That's the whole point of the Department of Insurance, is to protect consumers, protect the public. And there are laws in place for how claims are handled. You need to know these number of days and be comfortable with just kind of how the whole procedure goes, right? You know that it needs to be a written explanation for why we're denying the claim. There has to be an investigation done before denying a claim. So, which is an example of an unfair claim settlement practice: investigating a claim thoroughly, delaying payment without reasonable cause, requesting documentation to support a claim, explaining policy coverage to an insured. Okay, it would be B. We cannot delay payment without a reasonable cause, right? So it may say, let's just pretend that for your state it's 60 days, right? You have 60 days to investigate. That doesn't mean that you have to have an answer within 60 days. There could be a very, very complicated claim. Generally, they want to have it figured out by then. But it could take a lot longer. That's okay, but there needs to be a reason, right? So it can't be without reasonable cause. Another option they like to throw in there and trip you up is denying a claim. And people, will often like grab that one, right? But no, you can deny claims. Claims get denied all the time, right? Not all the time. I don't mean to say that, but not everything is covered. If insurance companies just covered every claim, they would go bankrupt. We wouldn't have insurance, right? There are certain limitations, exclusions, things that you learned about when you were learning about property and casualty, right? So just make sure that it doesn't say denying claim, denying payment without reasonable cause. If it has that, then we're not allowed to do it, but we can deny a claim. All right. So unfair and prohibited practices. If I had to say the most important slide on this presentation, it is this one. But it's coming in real close with what your licensing requirements are, right? So how old do you have to be? How many hours of continuing education? Do you have pre-licensing education requirements? Things like that. That's real close second, but I still would say that this is the number one slide. You want to know these terms. You will see one, if not several, questions from here. So make sure you're very, very comfortable, and these are universal. The definitions are across the board. There's only one that might be a little state specific for the dollar amount. Okay. So misrepresentation, making false or misleading statements about policy terms, benefits, or insurer financial condition, right? So making false or misleading statements, right? We're going to see that in a couple of these definitions, right? But when we're talking about misrepresentation, it is talking about the policy terms, benefits, or the insurance financial company. So misrepresenting the policy that you have, or the company that you work for, maybe they're about to be going bankrupt, but they're like, we're doing great. Or saying our policy covers everything, right? I don't think there's any policy that covers everything, right? So misrepresentation is usually about yourself, or the company that you work for, right? So misrepresentation, kind of boasting and lying, right? So you can speak highly of yourself, but it cannot be false or misleading. Okay. False advertising is also making false or misleading statements, but in circulating false literature, or misleading advertising about insurance products. So if it's talking about advertisements or literature that goes out, mail brochures, etc., then we're talking about false advertising. Okay. It's also a prohibited practice. Defamation is also making false or misleading statements, but this is about someone else. And it has to be malicious, derogatory, usually harm, usually bad, right? So the misrepresentation is usually lying, saying good stuff. That's supposed to say good. One second. This is usually going to be lying, saying great things about yourself and the company you work for, which, again, as long as they're not false or misleading. Defamation is false, malicious, derogatory, misleading, but it is against another insurer or insurance company or agency about them as a person or their financial condition. So you can't be like, don't go to, you know, that agency across the street, he's a drunk, or I heard this company's going out of business. If you know, don't have that factual information, also you could still kind of get in trouble. So don't talk bad, right? Speak no evil. If you don't got nothing nice to say, don't say anything at all, right? So, but defamation is for someone else. All right. Boycott, coercion, or intimidation. They could use any of these terms, and that is entering into agreements to boycott, coerce, or intimidate any person in insurance matters. So you don't want to be going around bullying people and coercing them and strong arming them to come buy your policy. I'll cancel your policy if you don't buy another one. Things like that. Okay, rebating. Rebating is probably the most commonly tested one on. It's also probably the finest line in insurance where agents get in trouble. Rebate equals bribe. But the word that they use often in the insurance world is induce or inducement. Just means bribe. Okay, so offering inducements not specified in policy to encourage purchase of insurance. You cannot give something of value to somebody in order to come buy a policy. Now, some states, a majority of states, rebating is completely prohibited. Some states have a low dollar amount, usually $10 or $25. You'll know, it'll say it in your chapter if there is some kind of limit. But again, it still can't be for them to come purchase a policy, right? When I owned my agency, there was, the company actually provided it to all of us agents. They gave us $10 Visa gift cards as part of a promotion, and we were able to offer those to the public to come get a quote, right? So even if they got a quote and walked out the door, we still gave them the $10 gift card. What I couldn't do is say, I'll give you two if you sign your policy up with me, or I won't give you this unless you sign up your policy with me. No, it had to be offered in general. Or they'll give you scenario questions. And even if they don't say a dollar amount, you'll be able to tell from the test question that it's something of high value, right? Like floor seats to a sporting event or a sold out concert. Or another one they love to say is paying their premium, paying their first month premium, paying their annual premium, sharing commission, right? That already is its own unfair trade practice, right? You can't share commissions with somebody that's not licensed, but that would be offering them something of value, inducing them to come sell. And this is where agents usually find themselves in trouble, is saying, I'll pay your first month premium. Let's switch this policy over. That would be rebating. It is an unfair trade practice. And depending on what state you're in, the fines can be pretty hefty. Okay. And unfair discrimination. Making unfair distinctions between risks of the same class. All right, you're going to usually see the word same class in the question. So insurance is discriminatory in its own way, kind of, right? And it's allowed to be to an extent, right? As long as it is statistically provable and for people of the same class, right? So a young driver, a brand new licensed driver, is going to be rated higher than somebody who's an experienced driver with no tickets, right? So that's okay. They can charge a better rate to an experienced driver, right? They encourage you to not have speeding tickets or accidents and things like that. Somebody with a brand new license is going to be a higher risk. In life insurance, right? So women technically have longer life expectancies than men. Not to say that women don't die before men, but statistically, looking at the law of large numbers, it's something they can prove. So women are going to get better rates on life insurance. So they can discriminate as long as it's in the same class. What they can't do is give two young drivers, different rates because of, religion or um, socioeconomic status or race or things like that, right? So if it's within the same class, they cannot discriminate on rates. Okay. So the biggest thing, you need to know these terms, right? They're going to give you, which of the following unfair trade practice is this? Or what is the definition of false advertising? You need to know these terms inside and out. Make your flashcards. Okay. But what you need to know is, let me move this, the number of fines and penalties. They will often ask, what is the maximum penalty for rebating in your state? What is the maximum fine or penalty for um, defamation in your state, right? And it varies. There are some states that it's as low as $1,000, and other states it's up to $75,000 per incident, right? You need to know that number. So know these terms and know your fines and penalties specific to your state. Okay, some sample questions. Sample question 1. A producer offers to pay the first month premium for a prospect. This is an example of what? Rebating, right? They're offering something of value, which it costs money, that first month premium. Cannot do it. Sample question number 2, making false statements about a competitor's financial condition. We're talking smack about somebody else. What is that? Defamation, cannot do it. Some other questions would be, what is the maximum penalty for defamation or rebating? Know that number for your state. All right, and welcome back to the channel. Today we are diving into one of the most boring and most challenging sections, but one of the most important, and that is state laws and regulations. Now, this is the generic national version. It is not state specific, and you do need to know your state specific numbers, timelines, things like that. We are working on getting videos created for all 50 states and Washington, D.C. But in the meantime, until we roll those out, this is a great video that will work for everybody. It's going to... All right, moving on to producer duties. Producer equals agent. That is you once you're licensed, okay? So you have some duties and responsibilities, right? Fiduciary responsibility. When you see the word fiduciary, I just always kind of thought fiduciary, financial. So the F and the F, fiduciary, it means money. It means handling premiums. Producers have fiduciary duty regarding premium handling and client relations. So what is your responsibility when it comes to handling money, right? Because the insured, the customer is going to hand over their premium payments to you. You need to get that to the insurance company. That is your fiduciary responsibility. But it doesn't stop there. They're going to have some rules and timelines with that. Or if an insurance company pays out a claim, a lot of times that's handled, especially in property casualty, it's going to go right into the client's bank account. They're going to provide their routing, etc. But life insurance, a lot of times it'll go to the agent so that agent can kind of hand deliver that to the recipient. That money is not yours. Either way the money's going, it is never your money. And so you must handle it that way. You must handle premiums in accordance with written agreement with the insurer and state law. So across the board, it's going to be that you need to handle the money properly. You cannot commingle it, which we're going to get to in a minute, and that you need to get it to the insurance company ASAP. and never mix it, okay? And that it always must be in a trust account, a separate trust account. So there may be certain time frames that you have 10 days to get it to the insurance company. It's usually much less than that, actually. Or you may not have a state specific, right? It could be company specific. In that case, then the answer would be promptly. So premiums collected may require separate trust accounts, not may requirement. There's not a state that I've taught that doesn't require this, right? So if somebody comes in and hands you their payment, their premium payment for their homeowner's policy for the year, and then your electricity for the office is due, you can't borrow from that money, pay the bill, and make it up, things like that. That would be commingling of funds. Okay. Um, you cannot touch that money. It is not yours, right? Or let's say somebody brings in their premium for their brand new policy and you know that you're going to get $200 commission. You can't just take it out right there and then give the insurance company, the other part. You need to wait, remit it. Remit just means give to the insurer. So if people are coming in and making payments, you need to then get it into the insurance company's bank, right? It depends too. A lot of things are handled online. These days, electronically, people make their payments online. It's not actually going to the agent. But insurance laws and regulations are still very much written as if everybody's just got their hometown agent. And a lot of people still do. When I owned my insurance agency, we had people come in all the time, bringing in cash and checks to pay their policy. They like to come in, they like to stop in, they like to know their local agent. So it is still very much a personal interaction. But if they are coming and handling that money in, right, we had to submit it to the bank and we had 2 business days, right? So when somebody comes in and makes a policy, we add it to their policy. We add the payment in there and that money goes into my drawer. But I need to get it to the insurance company. So we had specific envelopes and I had to go to the bank every day after work and remit that payment to the insurance company. Okay. Now, for the life insurance company I work for, I'm never touching that money. These are all handled electronically over the phone. The payment's going directly to the company. Then the company sends me my commission. So it just kind of depends. But you just need to know that you cannot commingle the funds, right? I cannot put that money into the drawer and then buy everybody lunch and we'll figure it out later. No, do not commingle. And they must remit premiums promptly to the insurers. There may be a number depending on what state you're in. But usually it's going to be just promptly and it's going to be company specific. But either way, don't hang on to it, right? It's Friday and you forgot to deposit it into the bank and now you got a 3-day weekend and then you forget about it come Tuesday and a couple days later you can get in a lot of trouble for that. So sample question. A producer's fiduciary responsibility includes A, guaranteeing coverage will be bound, B, properly handling client premiums, C, providing legal advice to clients, or D, setting premium rates for policy. We don't do any of those other things anyway. But if you see the word fiduciary, it's dealing with client premiums. Okay, so the correct answer is B. Company regulation concepts. Okay, certificate of authority. Required to conduct business in the state, insurer must meet capital and surplus requirements. So your certificate of authority equals your ticket to transact. Now I'm saying you, but what I actually mean is the company. So this is insurer. Regulations and rules and laws. So any insurance company that you go work for must have a certificate of authority. This is required to conduct business in the state. You can't just say, if you go have a license and then your buddy gets his license, you can't just say, we're an agency, we have insurance, or, going and putting your own money into, a pool for claims, things like that. No. Any insurance company needs to have a certificate of authority to transact business in the state. Okay. So certificate of authority equals ticket to transact. And if you have a certificate of authority, then you are authorized. Okay. So I want you to know that authorized equals admitted. Admitted equals authorized. Authorized equals admitted. They can throw either of these terms in there. The question could be simple as, if a company is admitted to transact business in the state, what are they considered? Authorized. If an insurance company is authorized to transact business in the state, what are they? Admitted. All right, these go hand in hand. And how do you become authorized or admitted? By having a certificate of authority, your ticket to transact. So authorized equals licensed to write insurance in the state. Unauthorized is not licensed, and this is going to be for surplus lines companies only. So, unauthorized equals non-admitted, which also equals surplus lines. Surplus lines, you're going to learn about them more in your courses, but it is for unique, hard to write business, maybe in business it's not written a lot of like celebrities that insure their body parts, right? Or, really, really hard to value artwork. It's just kind of unique situations. There are surplus lines companies that are unauthorized, non-admitted. So what do you think that means? That means they don't have a certificate of authority, right? Because if they had a certificate of authority, they would be admitted, they would be authorized, they'd be able to transact business in the state. Well, then how the hell can they still transact business in the state? They would have to be a surplus lines company, and that still needs to be filed and approved with the Department of Insurance. So you could see multiple questions on this box right here. So make sure that you are very comfortable with the terms, right? Authorized equals admitted. Admitted equals authorized. Unauthorized equals non-admitted, not admitted, right? And what does that mean? How do we classify you into one of these? Is whether or not you have a certificate of authority. That certificate of authority that authorizes you to transact business in the state. They could ask you, which of the following does not require a certificate of authority to transact business in your state? And the answer would be surplus lines. Okay. Domestic, foreign, and alien. They love to ask a test question on these terms. Make sure you are familiar with it. Domestic is incorporated in the state. All right. If you are licensed in Florida and you sell for a company in Florida, you are a domestic insurer. They are a domestic insurer. Sorry. Okay. So when it's within the same state, it is domestic insurer, right? So this isn't talking about your State Farm agency that says, John Doe on it, right? We're talking about the main State Farm agency. Okay. So Allstate is actually headquartered in Illinois, but there's Allstates all over the country, right? So if somebody is selling, or has an Allstate agency in California, they are actually a foreign insurer. Okay. So when it is outside of the state, it is foreign. I know when we generally see the word foreign, we think outside of the country, not when we were talking about the insurance exam. Okay. A foreign insurer is if you are outside of the state in which you are domiciled in. Okay. They like to say domiciled, and that just means your domestic home state. So domestic domiciled, right? So they could say a company that is domiciled in Michigan but is writing policies in Colorado is what? They are a foreign insurer. Or a company that is domiciled in Michigan and only writing policies in Michigan, what are they? A domestic insurer, okay? When we are outside of the United States, then it becomes alien. Now, you don't need to know where the headquarter of every insurance company exists. They're going to give you very clear, they're going to name 2 states in the question. If the question has 2 states, you don't even need to finish reading it. The answer is foreign. If the question is the same state, domestic. If they start, listing outside of the United States, then it would be an alien insurer. All right, sample question. Oh, nope. Insolvency and guarantee funds. Okay. Insolvency just equals bankrupt. for simplicity's sake. So if a company is insolvent, they are going bankrupt. They don't have enough money to pay out their claims, things like that. So there are certain guarantee funds. Every state has one. And it's going to be called, the Florida Guarantee Insurance Fund, the Mississippi Life and Health Insurance Guarantee Fund. So make sure you check that out. And what it is a state guaranteed fund that protects policyholders when insurers become insolvent. So it could just say, who steps in if an insurance company becomes insolvent, and it would be your state and then Guarantee Association Fund. But they also like to ask the limits. So know your numbers for your state. It is generally $300,000 for property and casualty insurance. So it'll cover, if somebody's house burns down and they're like, sorry, we're actually not going to pay for that. We are going bankrupt. We are insolvent. The Insurance Guarantee Association or Guarantee Fund will step in and cover up to whatever your state limits are. It is generally $300,000, but know that number for your state. Okay. Now the sample question. Which type of insurer is incorporated in the state where it is writing insurance, right? So that would be domestic. It is incorporated in that state where they are writing insurance. All right. Some key property and casualty specific rules and regulations. Now, your state may have a lot more, all right? And I like to say, if your state has a law and regulation that has its state name in it, like the Ohio Fair Plan, I like to think if the state has put its own name in a law, they're going to ask you a question about it. So outside of what we've gone over and what we will continue to go over, which are the main testable points in this section, also when you're skimming through this reading, you may find things we haven't talked about. That doesn't mean that you won't see an exam question on it, but it's less likely. However, when you are going through and some states have a ton of regulations, if you see something that has the state's name in it, that's just kind of my exam tip. Just think about it. It's their own law. They're going to probably ask you about it. So make sure you're comfortable with those. Okay. Record keeping and rate regulation. So understanding these P&C specific requirements is essential for your exam success. Record keeping requirements. You need to know this number. This is state specific. It is generally 3 to 5 years, but it's going to depend on the state. So it's how long must an agent or an insurer keep records on file? You need to know that answer. They love that exam question. It is generally 3 to 5 years. Find out what yours is. Rate regulation basics. States use prior approval, file and use, or use and file systems for rate regulation. So while you're going through this rates, see how your state comes up with these rate regulations. Is it prior approval, file and use and file? Not going to jump into too much detail there, but take a look at that in your state-specific content outline. Or again, check out our videos. And if we have your state specific up, if not, we are working on it. I promise. Drop your state in the comments. And that helps us kind of determine which ones we're rolling out next. We are working through all of them. But, if we're seeing a ton for a certain state, it may encourage us to bump that up the line. All right. You can also join our community on school, which, I talked about earlier on too, where, there are instructors in there and other students going through this that can help you work through some of this as well. We also do our live classes. We also have tutoring, things like that. So, okay. Binders. Binders are temporary coverage. They are pending policy issues, must specify limits, terms, and effective period. So binders are like until you can get the full policy in place. I saw this a lot. We had launched a bunch of insurance agencies inside of car dealerships. And so when people, car dealerships, they never close, right? We worked holidays, nights, weekends, late nights, things like that. And so if they're trying to write a policy, they've been negotiating about the car, it's 10 o'clock at night, they need insurance to drive off the lot. there are, we would write binders for them, and it's kind of this temporary coverage until they can get a hold of their agent on Monday morning or the next day, etc. So know what your specific limits and effective periods, etc. are. Cancellation and non-renewal rules. Specific notice requirements and allowable reasons vary by state and policy. So certain states may say if you're going to cancel or non-renew, how long do you have to notify the insured? And it's going to vary, so if it's for any reason other than non-payment, it's usually longer. If it's for non-payment, it's usually shorter. And they love that question. So make sure you know what your cancellation and non-renewals are. Sample question: which rate regulatory system requires insurer approval before using rates? I mean, even if you had no idea about any of this, I feel like you could figure this out. Which rate regulatory system requires insurance approval before prior approval? Okay. You also need to know your auto financial responsibility limits. You need to know what your minimum liability is for the state. I can guarantee you will get that question. If not, please let me know because I will be shocked, right? So again, we're not going to go into a lot of detail on what this means. You're going to learn that in your auto policy chapters or courses or, our videos that we're rolling out. But it is going to vary by state, and they do vary. It's crazy. So, whether it's 25,000, 50,000, 10,000, right? So that's your per person, per occurrence, per incident, and then property damage. You need to know what your minimum liability requirements are for your state. So must verify your state specific limits. All right. Uninsured, underinsured motorists. Every state has different numbers here, right? They generally match your minimum requirements, but not always. Some states it is mandatory. Some states it is optional. Almost every state, if you decline it, like if you're allowed to, it has to be in writing. So just spend a little on spend a little on this paragraph, section, chapter. Know your minimum requirements, know your UIM limits, and is it mandatory, optional? Do they have to decline it in writing? And workers' compensation. It's generally mandatory for most states. For most employers, it provides medical benefits and wage replacement for job-related injuries. Some states have state funds, others use private insurance or self-insurance. So you need to know if it is mandatory or optional for your state. And you need to know what it covers, whether it's injuries, death, medical expenses, funeral expenses, things like that. And so each state's going to vary there. You'll have a paragraph about this in your writing, or in your reading or in your chapters. And then insurance fraud is a serious offense. States have specific fraud statutes and investigation units. Both hard frauds, staged accidents, and soft fraud, exaggerated claims, are prosecuted. You can even get in trouble whether it was knowingly or unknowingly. So even if you accidentally committed fraud, which I don't know if that's possible, but if you did an unwillful violation, not even necessarily just fraud, but any of the other prohibited practices that we talked about, there are some states that can charge you a fee and penalty per those. So maybe it's $5,000 for unknowing, unwilling accident, and maybe it's 30,000 for practices that you knew what you were doing. So you need to know the numbers, know the fines, know your penalties. And usually there is going to be a separate one alone from, separate from your regular unfair trade practices, rebating, misrepresentation, defamation. Usually fraud is going to have its own number, and it's usually going to be higher for the fines and penalties. So know what your fraud, fines, and penalties are. So some federal regulations affecting P&C, and these are across the board because it is federal, right? So that is not managed by the state. But the Fair Credit Reporting Act, make sure you are comfortable with the definition. What is it for? And it is to protect consumer reports. So consumer report rules when using credit information for underwriting. Adverse action notices required when taking unfavorable action based on credit reports. So if we are declining somebody a credit card or declining somebody, in this situation, an insurance policy, because credit does play a role in insurance rating for property and casualty. Somebody that is more doesn't have as great of a credit score, they are statistically able to come to the determination that you are a little bit more dangerous, right? You are a little bit more careless, right? So you're going to generally have a higher insurance rate if you have a lower credit score. Um, but if you are going to decline somebody for their credit score, you need to make sure that you send out a written adverse action notice, right? Mostly what they're going to ask, if they did ask you that, what is it called? Right here, this example question, what must be provided when taking adverse action based on credit information? And it is adverse action notice, right? I mean, the words are right there. So, but generally they're going to say, which one of these federal regulations protects consumer reports, right? And that is FCRA, Fair Credit Reporting Act. GLBA, Graham-Leach-Bliley Act. It is enforced under state insurance law by state insurance authorities. It is privacy rules for non-public personal information, opt-out rights for consumers. So which federal law requires financial privacy notices? And that is the Graham-Leach-Bliley Act. A lot of times you'll see these together and it'll say, which one of these organizations protect consumer reports and privacy reports, and they would put both these answers together. You often hear Fair Credit Reporting Act and Graham-Leach-Bliley Act together. But know the difference, right? In case it is not, and they're asking you the difference. And then TRIA, Terrorism Risk Insurance Program. It is federal backstop for terrorism losses. Requires a certain disclosures about terrorism coverage. It applies to commercial property and casualty policies with specific requirements. So example question, TRIA requires disclosure of terrorism coverage for A, personal auto policies, B, commercial property and casualty policies, C, life insurance, or D, health. It's going to be commercial. Right? I just renewed my business insurance and I have to opt in or out of terrorism protection. And that's only offered on my business insurance policy, my BOP, not my homeowners. Okay. All right. So, universal state law patterns, licensing patterns. Now, these are the most common, and I always say when in doubt, the answer is 30 days. But that's actually not true. There are some states where I say that, and then we only see 30 days for one of the things, and the rest of them are all over the map. You need to know your numbers. You need to know your state specifics. Understand your producer standards. Those are the same across the board. The fiduciary duties and no commingling of funds and remitting those payments promptly. That is for all agents across the board. You got to be appointed no matter what state you're in with the insurance company you work for, and know that the funds need to be held in a trust account. Just make sure you're comfortable with all of these. And then again, those prohibited practices, make sure you know the definitions of them and know the fines and penalties. I cannot stress that enough. If we have your state specific video up, we go over those with you. Here's an example of a summary kind of recap table that we have at the end of our sessions, at the end of our workbooks. This is not necessarily going to be helpful for you because it's just kind of showing you some typically 3 to 5 years compliance requirement. But it can give you an example of the kind of notes, the kind of things you should be looking out for if you want to pause this, or, you want to go get one of our workbooks online. We have these at the end as well, so that you know some of those concepts you need to be paying attention to, especially when you're in a state when the regulations chapter is huge. Now, we do have this 10-question quiz. Again, when there's these ranges, that's not how you would see it on your exam. It's going to be specific to your state, but I just want you to get comfortable with how these questions may be worded. Okay? So, which of the following is required for producer licensing in most states? proof of prior insurance experience, a minimum of 3 years state residency, completion of a pre-licensing education, or a letter of recommendation for an insurer. Now, you don't need to prove that you have prior insurance experience. You don't need a minimum state residency. You do not need a letter of recommendation. So the answer here would be C. However, the answer would be C, not B. Not every state's going to require a pre-licensing education company, a pre-licensing education certificate, right? So it would say, in Texas, is there pre-licensing education requirement? No, right? Or in Illinois, what is the pre-licensing education requirement to get your license? And it is 20 hours with 7.5 spent in a classroom, right? So they're going to vary, right? So they're going to ask you specific questions. They're not going to ask you these broad questions, but it's just kind of getting you comfortable with how they could be worded. Typical continuing education requirement for P&C producers is, we did say 24 to 30. Again, this would be exact. This would say what are the continuing education requirements in Hawaii, right? Or whatever state you're taking this for. Number 3, a producer's fiduciary responsibility includes guaranteeing policy coverage, properly handling client premiums, or setting insurance rates or underwriting risks, right? When we see the word fiduciary, we're looking for client premiums, all right? So properly handling that money. Number 4, unfair claims settlement practices include requesting documentation for claims, investigating claims thoroughly, delaying payment without reasonable cause, or explaining policy coverage to the insured, right? We can request more documentation. We absolutely need to investigate them thoroughly, and we need to explain our policy coverage. We cannot delay for no reason. Rebating is defined as selling multiple policies to one client, offering inducements not specified in the policy, comparing competing insurance policies, or collecting premiums for coverage. It is inducements, offering inducements. Remember, inducements equals bribe. Number 6, auto financial responsibility laws require comprehensive and collision coverage, minimum liability limits, varies by states, uninsured motorist coverage in all states, gap coverage for financed vehicles. This is kind of a tricky question. This isn't how they would word it. It is minimum liability. Every state does have at least a minimum liability, but it would say, it would ask for those exact numbers, right? FCRA requires privacy notices for all insurance policies, adverse action notices when using credit reports, terrorism coverage, disclosures, or workers' compensation coverage, right? It's going to be adverse actions. Credit reports. Credit reports is Fair Credit Reporting Act. GLBA applies to health insurance only, property and casualty insurers and agents, life insurance only, or workers' compensation only. All right, I don't like how this question is worded, and it wouldn't be worded like this because, well, okay, I guess so. So property and casualty insurers and agents. While it is also applies to health insurance and life insurance, whenever you see the word only or solely or completely, you usually know that's not the right answer. Nothing in the world is that black and white. Or that extreme. So it does apply to property and casualty insurance and agents. It does also apply to the others. But when they're saying health insurance only, life insurance only, that's what makes you know that those questions aren't correct. Generally, when you see GLBA, it's going to be the definition, the term. Certificate of authority is required for individual producers only, insurance companies to operate in a state, surplus lines brokers only, or public adjusters only. It is insurance companies, right? Your certificate of authority is what the insurance company has to transact insurance in that state, your ticket to transact. Guarantee funds typically provide protection up to, now we did say $300,000 for property and casualty claims. Again, you're going to need to know your state-specific number. We have the answer key here, but we did just go over those as we did the exam questions. So it's a final P&C exam prep checklist, right? Make sure that you don't need to know that most licenses renew every 2 years. Know what your numbers are. Know your state specifics. Understand appointment requirements. No appointment equals no authority. Remember notification requirements. Understand what fiduciary duties what fiduciary means and what are those fiduciary duties, what you cannot do. Know the scope of producer authority and its limitations. Understanding if you have fingerprinting and background requirements and continuing education requirements, how old you need to be an agent. And regulations and federal laws. Make sure that you know the unfair trade practices, know what they mean, and know what their fines and penalties are. Know what the unfair claim settling practices are. Know the days and timeline specific to your state. Understand the role of the insurance commissioner director. Remember those duties of the commissioner director, superintendent, chief officer. It all depends on what state you're in. Know what your auto minimums are by state, and know your company regulation basics, certificate of authority, guarantee funds. Use your time management wisely, review your materials, stay hydrated, get rest, focus, don't overdo it, don't overthink it. You've got this, and we've got all the resources here to help you. So, I know it says know the patterns, but you're not going to be tested on what are the patterns across all the states. But you could follow along with your state outline, right, to the video that we just did and highlight and circle what those state specific numbers on you. These are the most common exam loved questions and topics that we just went over. Okay. This is a great way to, even if we have your state specific video out there, this is a great way to kind of test yourself, come back, follow along to this video, and fill in with what your state specifics are. Test yourself that way. But you've got this, and I will see you soon.